Welcome back to my channel. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals, and today I'm following up on last week's QQQ trade. As you may remember, I was assigned to buy 100 shares of QQQ at $516. Today, I'm taking the opportunity to de-assign the position. I sold the shares and established a new cash-secured put. This time around, I decided to prioritize lowering my strike price rather than chasing higher income from the trade. With market conditions as unpredictable as they are, I know that gradually bringing my strike price closer to the current share price will give me more flexibility for future trades. I tested a lot of orders before finding one that worked. Eventually, I was able to generate some premium and drop my strike, but I had to go further out in time than I normally like to make it happen. Managing this trade has not been easy, but I'm making slow, steady improvements to my position and, most importantly, avoiding locking in losses. Let's take a look at what I did and why. Assignment at $516 has put me in a negative cash balance, which means I am now paying for margin. I'm going to sell 100 shares and look for a new cash secured put that will generate a net credit. My priority is lowering my strike price. I'm going to sell 100 shares and look for a cash secured put that will bring in enough income to generate a net credit of more than $516 a share. A May 2nd expiration with a strike price of $515 and a limit order of $516.10 a share is very unlikely to fill, but I'm going to give it a try. I wait a few minutes and the trade doesn't execute, so I try something else. A May 16th expiration likewise does not bring me the income that I need to avoid locking in a loss. So I start looking at expiration dates that are further out in time. I look at June 20th. No luck there. I try June 30th, which looks a little bit promising. And since I can't get the fill that I want, I decide to try shorter contract lengths, keeping my strike price at $516. So I look at May 9th and May 23rd. June 30th is my first attempt. And when I can't get that order to fill, and finally just bite the bullet and do what I need to do, I edit it and move all the way out to July 18th. I reduce my ask from $516.85 to $516.65, and finally it fills. I brought in $516.80 per share for a net credit of $78.68. I am really not loving what I have to do here, but slow and steady wins the race. In the final analysis, earning $78.68 on $51,500 of capital is a really lousy 0.52% annualized return. But when it's all said and done, I did lower my strike price, slightly reduced my capital at risk, and avoided locking in a loss. So considering where things stand in the market right now, I will take any improvement I can get.